Decoupling from China involves loosening the economic bonds between China and other nations. This concept has gained traction during escalating political tensions, particularly between China and Western powers like the US and the EU. This video delves into the potential ramifications of decoupling the global economic landscape, zooming in on the intricate trade dynamics among China, the United States, and the European Union. We meticulously dissect the potential impact on each economy and discern which party might bear the brunt of this seismic shift. Let's start with the United States. As one of the foremost powerhouses in the global economy, the US has wielded significant influence since the late 19th century, particularly post-World War II and the collapse of the Soviet Union. Renowned for its innovation and allure as an investment hub, the US nevertheless grapples with challenges such as trade deficits and allegations of currency manipulation. But what does decoupling from China mean for the United States? Stay tuned as we explore this question further and unravel the intricate web of economic interdependence. And hey, if you're finding this content helpful, don't forget to show your support by hitting that like button. We truly appreciate your support. On the flip side, China has experienced remarkable growth over the past 4 decades, solidifying its position as an indispensable node in global supply chains and a pivotal trading partner for numerous nations. Under the governance of the Communist Party, China's economy underscores state control, emphasis on technological self-sufficiency, and robust state-owned enterprises. Despite its economic clout, China's foreign investment development trails behind, highlighting disparities between its model and those economies with more open market principles. Now, here's a question for you. What are your thoughts on China's state-controlled economic framework compared to the more liberal economies? We'd love to hear your insights in the comments below. Decoupling, particularly between the US and China, would necessitate a profound reconfiguration of their economic entanglements. This intricate process entails disentangling complex trade affiliations, reshaping supply chains, and exploring alternative economic alliances. Geopolitical tensions, national security imperatives, and a drive to diminish dependency on potentially adversarial states serve as the primary impetuses behind the decoupling endeavor. Now, let's delve into the trade dynamics between the US and China. In 2022, China ranked as the 3rd largest goods export market and the 6th largest services export market for the United States. The amalgamated exports of goods and services to China sustained over 1 million American jobs. However, despite reaching record highs in goods exports, the growth trajectory lagged compared to other prominent markets, owing to factors such as China's economic deceleration, the Russia-Ukraine conflict, and escalating tensions between the US and China. Mexico before reaching the US. This realignment reflects both geopolitical tensions and a strategic move by the US to lessen dependence on China, which carries significant implications for both economies. The mutual reliance between the US and China is multifaceted. Trade stands out as a key aspect, with the US heavily reliant on Chinese imports, while China relies on the US as a major export market. Investment further intertwines the two nations. The US company is deeply entrenched in the Chinese market, and Chinese investments permeating various sectors in the US. Additionally, global supply chains centered around China contribute to this interdependence. EU decoupling from China. The EU's trade ties with China have burgeoned notably, particularly in sectors like electronics, where the EU has grown heavily dependent on Chinese inputs. This dependency has raised concerns regarding strategic vulnerabilities and prompted discussions on the imperative of decoupling for both security and economic reasons. However, the EU's approach to decoupling from China diverges from that of the US. The EU strives for a balanced approach, aiming to maintain engagement with China while remaining open to other global partners. Decoupling efforts within the EU are propelled by initiatives under Brussels' risk policy, including investment screening, export controls, and industrial policies geared towards fortifying domestic production in critical sectors such as infrastructure. Technologies vital for facilitating the green transition, such as digitization and artificial intelligence, underscore the importance of technology collaboration between the EU and China. This cooperation yields significant commercial and economic advantages, rendering complete decoupling particularly costly for Europe. In 2019, EU-China trade soared to 999 billion euros, underscoring the magnitude of economic interdependence between these two regions. Notably, German investments in China exemplify the depth of this relationship, skyrocketing from 30 billion euros in 2010 to 81 billion euros in 2017. During the first 11 months of 2023, the trade volume between the EU and China surged to a staggering USD 76.3 billion. EU exports to China accounted for USD 27.8 billion, while imports from China totaled USD 48.5 billion. This robust trade relationship remains significant, notwithstanding a noted 11% decrease in China's exports to the EU compared to the previous year. The intricacies of EU-China economic ties, coupled with strategic competition and security apprehensions, underscore the formidable challenging of decoupling, despite mounting political hurdles. As a critical trading partner for Europe, China holds particular significance, especially for key sectors like the automotive and pharmaceutical industries in Germany. However, the specter of economic sanctions against China in the event of a military conflict, such as in the Taiwan Strait, looms large and could have disastrous ramifications for the European economy. In response, the European Union is charting selective decoupling strategies, aiming to diminish strategic dependencies on China while preserving mutual interdependency in areas beneficial to Europe. This strategic approach entails diversifying imports and exports away from China and forging technological and trade partnerships with middle powers like South Korea, Vietnam, Indonesia, Israel, Japan, and India. As the US and EU navigate the complexities of decoupling from China, the BRICS nations stand watchfully, poised to recalibrate their economic strategies. They recognize the potential ripple effects and are enhancing their collective response through strengthened intra-BRICS trade, collaborative technological development, and unified political stances. By increasing trade within the bloc, the BRICS nations could offset the trade vacuum of reduced Western engagement. Moreover, as these nations diversify their economic alliances and bolster regional partnerships, they contribute to a more balanced and multipolar global economic order. In 2024, the United States is witnessing a shift in import patterns, with a decreasing dependence on China for critical and non-critical goods. This shift aligns with a broader trend of diversifying supply chains away from China, reflecting a strategic move towards reducing reliance on Chinese imports. Notably, the import share of critical goods from China declined from 17.9% in 2017 to 11.1% in 2023, with significant reductions observed in sectors where the US previously exhibited the highest dependence, such as communication-related goods and information technology. Despite efforts to diversify supply chains, the US may still indirectly rely on China through other countries. The rivalry between the US and China, especially in high-tech sectors, is escalating due to national security concerns. Policies restrict investments in critical Chinese industries. Mexico has surpassed China as the US's top import source in 2023. Trade growth between China and the US has slowed, influenced by geopolitical factors. Decoupling from China is complex, involving reduced economic ties due to political tensions. Thanks for watching. Share your thoughts below.